Hello traders, happy Friday. It's Friday the 27th of February 2015. It's the last trading day of the week and we had a little bit of action overnight, all US dollar related, and we're coming into a quiet Friday to round off the week. So just quickly, let's get into it. We had overnight, sorry about that. We had overnight some US dollar moves. The market, not too many other currency pairs weighed in on the market, but the US dollar certainly grabbed hold of three Fed Reserve members, mentioning to the press that they favour a June rate hike. That's Fisher, Dudley, and Mester. Those three members are not voting members of the Fed, and it's actually quite interesting that the market jumped onto it, and the US dollar really bounced on the back of those guys saying that they believe that they favour a June rate hike because they're not a voting members. Fisher's actually leaving, I think, in the third quarter of this year, leaving the Fed. So perhaps the move last night was just overdone, overcooked. I'm not sure why that US dollar move was so strong. And we could see it actually reverse as a result of that. There wasn't any other data to justify the move. We had better than expected core CPI, but it wasn't a massive outperformance. So tonight we have coming up, we've got home sales and GDP, so we'll see what happens there. If they don't come in really strong, well then I'm quite certain that the US dollar move from last night will lose its momentum. So it's very interesting. We also had the pound move last night due to the US dollar, likewise the euro, the Australian, New Zealand, all of those. The US dollar really impacted every currency pair. But the pound itself had mixed data. We had better than expected exports, weaker than expected personal consumption. Nothing much happened there. Oil was its usual volatile self. It fell 4%, so we had an up day and now we've got a down day. We'll have a look at that on the technical charts. And if you have a look at the minutes coming up, we don't have anything. We've just got all this weak data coming out that the market isn't really anticipating besides the GDP. And it's expected to come in a little bit weaker than the previous. So we'll wait and see what actually eventuates. If it does come in weaker, we've got some home sales. The market will look at that as well. We'll see what happens with the US dollar rally. So Williams and Stanley, so Fisher and Dudley will start to do their speeches overnight. But like I said, I take everything they say with a grain of salt. So I think it's going to be a quiet session. And we could see some price action actually consolidate or reverse slightly the US dollar move of last night. So let's have a quick recap of where we are at fundamentally. And the US dollar is still, it's consolidated. Then we had a little bit of a bounce last night on those terms. Their economy's still going really well. And there's still an opportunity for a rate rise. It's still possibly likely from September or later. And basically, Janet Yellen said if she removes the word patience from the statement, it's just an indicator that they are considering raising rates. So when they do remove it, we could possibly see a knee-jerk reaction from the market and actually start buying US dollar quite aggressively. But it doesn't mean that we're going to get an interest rate rise next month. So we need to keep that in mind in the future. But they are still looking to raise rates. It's just a matter of timing. The rest of the world and global growth is quite subdued. So they're worried about raising rates and then it coming in and really hampering the recovery of the US economy. It's exactly the same story out of the UK. They still have on the table an interest rate rise this year, except they haven't been as forthcoming of indicating to the market that it's going to be definitely this year. So the market hasn't been as disappointed with them saying that we're going to, raise rates soon, but when the time's right for our economy. So it's all about the market expectations and the delivery of the individual governments. So that's where we're at, and we'll have to see what's coming up. It's coming up to the end of the month. So next month we'll start to look at the interest rate decisions for New Zealand, Australia. It's been dampened, it's been put to bed on Canada. Canada will not be moving their rates next month, so So that's been hampered, and we'll have to start to review what happens with the Australian and New Zealand economies there in terms of cutting rates. Now that the issue in Europe with Greece and the Eurozone has been put to bed, that's going to go quiet for a while, and we'll have to see what the market is going to latch onto in terms of what headlines are going to start moving the euro dollar again, because the Greece issue is just been, they've put a band-aid on it. They'll give them an extension of lending them money for another 4 months until we can see them get their act together. So that's where we're at. I'll be back again next week. I hope that you've traded well this week. Go enjoy the weekend. And until next week, trade well.